Welcome to Charts Today. My name's David Linton, and today's edition for Wednesday, the 5th of December, comes to you from London. And we had big falls in the US last night, which has precipitated falls in Asia. So we are just seeing markets really still in a state of turmoil, having had a rethink on the China US trade war. But the dollar is actually back to strong. It's short-term bullish. We see the dollar very much as a safe haven when this sort of thing comes up, and we're back to pushing higher again. So we're still not quite turning around on the point and figure chart, but we're back above the cloud on the 60-minute chart and looking stronger and stronger short and medium term. That's leading to a weak euro dollar, so we're seeing the euro lower there. Japanese yen is actually stronger against the dollar, the yen being an even safer haven than the dollar. So a flight to the yen is meaning that the dollar is still actually bearish against the yen. Looking at sterling, we're seeing pushing lower against the dollar, sitting at 127. These downside targets all hanging here. So and if we move below this low that we've seen in August, then we activate targets to 1 and 117, so parity for the dollar. That would be quite something. The euro, we're seeing sterling lower there, and against the Swiss franc lower as well, and against the Aussie dollar, actually, Aussie dollar is just looking a little bit weaker than sterling. Bitcoin is down another 2.4%, still bearish here. Lots of downside targets, and Bitcoin has yet got further to fall. The S&P 500 index was down over 3% last night. So that was quite a fall. Hasn't put us back into bearish territory on the short-term chart, but just shows the market is susceptible to shocks to the downside and struggles to hold on to any gains. The Nasdaq was down by a similar amount. The Dow was down 3%. And the Russell 2000 index has actually returned to short-term bearish. So from a market breadth perspective, the smaller stocks are all in bearish territory. The US markets closed today due to the mourning of President Bush, so it does just mean that we won't really have much visibility for Europe. So looking at the FTSE, we're reacting just purely to last night's fall. We are actually short-term bearish on the FTSE. In fact, we're bearish on all three timeframes: weekly, daily, and 60-minute. Downside potential another 2.5% lower for FTSE, and really now just starting to test this long-term trend on the 1% point and figure chart. So not looking great for UK stocks. Mid caps in the UK looking even worse, making new 2-year lows. So we are just seeing that 18-month lows. So it's really looking pretty dire. Downside potential of about 3.5%. The DAX is down 1.3%. It's returning to bearish territory in the short term as well. The downside target's less clear of late, but we still do have lots of downside targets from previously on this chart, pointing to around 2 to 3% lower. So it does look like we will go lower still there. And the CAC Courant also looking lower as well. So we're just seeing really markets across the board struggling. Japan actually wasn't too bad on the 400 index. The Hang Seng was down 1.6%, China down 0.6%. Still, our long-term worry has been China all through the year, and we've got really clear downside targets still hanging over the market there. And the Sensex down 0.7%, although holding on to its bullish trends on the long and the short term. Aussie market down 0.75%. And Brent crude is off 1.6% this morning, so giving up some of the recent gains we've seen there. And WTI, much the same picture. US nat gas still a bright spot, holding on to its gains, sitting at $4.57, so looking pretty strong here indeed. Gold is holding on to its bullish trend, as you might expect with all this turmoil. We have been as high as 12.40. We're back at 12.35 this morning, but we do have these upside targets for gold still here in the chart. So that flight to quality quite key there. And silver also looking better on the short term, not quite yet bullish on the medium term. US 10-year yields sitting at 2.92%, so they're really sinking lower. Downside target 2.75. We still do have the big long-term targets, but we're really pulling back, testing uh, uh, markets resolve, and bond prices consequently higher this morning. German bonds, the Bund actually into bullish territory on the medium-term chart. Long-term still has work to do, but bond prices looking a lot better with that fall off in stocks. Apple was down 4% overnight, so they're still short-term bearish below the cloud. Amazon also was down nearly 6%, although they are actually holding on to their short-term bull trend, but medium-term bearish. And Google were down 5%, much the same picture as Amazon. And Facebook only 2% lower on Facebook, but they've had a terrible time, and we can see here that the downtrend is still very much entrained in the medium and long-term charts. Taking a look at the markets themselves, this data coming from Yahoo Finance, it's a great free data source. Here we see um, the markets just in a sea of red. So the US was off heavily. Nasdaq was down 3.78%. We're seeing the Euro Stock 600 this morning down 1.23%, and most of the Asian markets, well, all Asian markets down, and some particularly worried. We're seeing Taiwan, for example, down 1.6%. The Hang Seng lower. So we are seeing quite a lot of big falls there. Taking a look at the Nasdaq stocks themselves, we've seen pretty much the performance of the bellwethers. One of the interesting things is just to click on the percentage rises. Tesla still bucking the trend. Interestingly, they were up in a really down market, so there still is an appetite to buy Tesla, and holding on to its medium-term bullish trends, and outperformed the Dow now this year. It was underperforming the Dow most of the year, now outperforming the Dow this year by about 6%. So interestingly, that turnaround is quite key. O'Reilly is the only other one that was up, and that's also holding on to its bull trend quite nicely, outperforming the market and upside targets. So they do exist, but they're quite hard to find. Aussie market was mixed. We had some stocks up. Trade Me Group was up 5.8% and looking very bullish on the chart there. But if we look at some of the other fallers, Liners down a massive 22%, Nine Entertainment down 8%, and Ausdrill down 8%. This chart looking dire with lots of multiple downside targets. China, we're seeing a handful of stocks are up. Hang Seng, same picture, and the Nifty in India, again, a handful of stocks up. Some really big fallers here. Sun Pharmaceuticals, for example, down 5.4%. Looking at the Nikkei, we see actually, because the Nikkei wasn't down as much, we are seeing a mixed picture. Just taking a look at that Nikkei index, we're down 0.5% when the other markets were down. The US was down over 3%. So the Nikkei faring better. Taking a look at Europe, we see here, if we go to the FTSE 100 first of all, just ranking by percentage, we've got 4 or 5 stocks that are up today. Bucking the trend. Shire up 2.4% and breaking to a new high on the chart, so that's quite significant. Even though we open higher, we're falling back a bit on that. That candle shows there, but we are outperforming the market quite nicely still on Shire. Landsec up 0.8%, but the chart's terribly bearish. Fresnel down as up, but the chart also bearish, and British Land similar. So we are seeing, even though we've got some quite good performances, we are seeing these charts looking worryingly low. In terms of the worst performer in FTSE this morning, Hargreaves Lansdown down 5%, and in their medium-term bear trend there, and Micro Focus down 3%. Taking a look at the FTSE 250, if we just rank by performance, Stagecoach up a significant 8%, but not enough to take them long-term bearish, but bucking their trend on the medium term at that. Thomas Cook, ironically, up 5%. They've been having terrible falls in the share price of late. They've gone from 150 all the way down to 25 pence, so really quite big falls there. Some interesting ones: Granger up 2%, Weatherspoons up 1.7%, and if we click the other way and just see Man Group down 6%, the Weir Group down 4.96%, Construction Care Group down 4%. Seeing a lot of these stocks really falling off a cliff, so that's quite a worrying energy and mineral stocks lower as well. Taking a look at the Euro stocks, the best performers Shire, which we looked at in Milan, we've got David Campari. They're looking better, and actually that chart looking pretty strong, bucking a trend there. Air France were down significantly yesterday, but this morning they're up 1.2%. Looking at the other end of the scale, we see Man Group, Hargreaves Lansdown, a lot of these UK stocks here. GEA and Germany down as well, and that chart looking pretty worrying. Not a great picture across the board. It's getting harder and harder to find stocks that are continuing to rise. That's it for today. Until tomorrow, happy charting. See you then.